Debt is not the problem, control is. How many of you ever looked at your paycheck and you wondered, where did it all go? And how many of you have ever felt like you're working hard, but somehow the harder you work, the further you fall behind? If so, you're not alone and you are exactly where you need to be right now. Welcome. Name is Jason Sipple. I want to acknowledge you for showing up for yourself, for your family, for your loved ones, for your future. And showing up isn't easy when everything around you is screaming for your attention. They need you right now. But this moment, it's different because today you start taking back control. And what we're going to uncover in the next few minutes together is why most Americans are drowning in consumer debt and why the system is designed that way. Who are you really working for? The difference between productive debt and consumptive debt, and how to tell them apart instantly. How you can build a personal financial system that never requires permission from a bank again. Does that sound sexy? And how one doctor, one client used this strategy to flip the script from 19 years of servitude of payments to freedom in 6. Now, listen, I'm not here to sell you on hope. I'm here to show you a system because I've been in your shoes. I see what other people are doing in my conversations, but not you guys, though. I'm talking about the other people, people not watching. And I remember the day I realized I wasn't working for my family. I was actually working for the lenders, for other families. And I was doing all the right things, the things I was taught. I was paying the bills, I was saving what I could, my credit was high, but I still felt like I was trapped. I still felt like had this giant elephant I couldn't get off my back. And the worst part is I blamed myself. I took ownership of all of that and I felt like I wasn't doing what I needed to do until I saw the bigger picture. Then everything changed and it was a slight paradigm shift. So today is about shifting your mindset from borrower to banker. It's about from going to being a consumer to being a creator. And I'm going to show you how to properly design whole life policy, structured the right way for you, can become the engine of your personal economy. You're going to walk away knowing how to use your dollars to buy back your time, to eliminate bad debt, turning that bad debt into assets, and finally build wealth on your terms. Are you ready? Let's dive in. And so when we're talking about debt, when we're talking about what's going on with the debt and the feeling of servitude that we have, as a country, as a whole. Like if you guys are feeling like that, put an I in the chat. Like if you feel at times, maybe you've already broken free of this trap, but it's easy to slip back. And the numbers don't lie. I was doing some research and I saw that consumer debt is at a record high, $18.2 trillion. And credit card balances are over a trillion. I've mentioned this before, but they keep climbing. It's a trillion plus. And saving rates have consistently been under 5%. I think last month they're around 4.5%. And so nearly 30% of us, nearly 30% of Americans can't cover 3 months in expenses. And most families are one event, one change. And we talk about the one constant in life, it's change, right? We all know that things are going to happen. Things are going to break down. Air conditions are going to go when it gets super hot like it is here in Florida. And we're all one moment when we don't build the opportunity fund, when we don't have control from financial collapse. And the worst part is that it's designed that way. It's designed to control us. Because imagine this, you walk to your mailbox, and how many of you like getting mail? How many of you like getting cards addressed to you? Me, I love mail. It doesn't even have to be cool mail. I go to the mailbox, I see my name on it, I'm ripping that open. But when I go to the mailbox, and imagine this, you go to the mailbox, you open the mail, and you pull out 12 or 13 things, you start looking through them, and the majority of them are what? They're offers. They're offers to give you 0% credit cards, to give you something for nothing. I hear that all the time. Oh, I transfer all my money to a 0% credit card. If you're super disciplined, that could be a good strategy. But for most of us, what happens? What happens is something happens, we need help, and we have all of these offers. We're like, oh, well, this one looks good. I've used them before. I'm going to open that up. I'll open a 0% and I will pay it back. You commit to yourself in that moment. I'm going to take care of it. And then what happens? Time goes by. All of the attention or all of the competition for your attention is constant. And the further we climb, the further we grow, the more we're needed, the more people want to be part of what we're doing. And so then you feel overwhelmed, you're behind, and you take that loan, you take that 0%. And then what happens? You go on, all of a sudden you're paying a little bit of interest to somebody else, somebody else's family, and you go on and you get busy with your life again. When you're focused on everything else, then something else happens. Another event, another change. It's inevitable. They come in waves in our economy every 8 or 9 years, but personally, they can happen faster. And sometimes, who knows this feeling? They all come at once. And you're thinking, okay, well, that's two. Where's the third thing? Because they come in threes. And when that third thing comes, what do? You open the third card, the third 0%, the personal line of credit that someone loans you for a really low interest rate over a long period of time. And before you know it, you're working for somebody else's family. Again, you're working for them. That is the game that everyone wants you to play. And that's why you're here. You're here because you're all smart enough to know that there is another game, right? There's a game that the wealthy are playing, and then there's a game that everyone else is playing. And we're here to talk about how the wealthy want us playing a certain game. And when we play the game, when we start becoming beholden to our debt to others, and all of a sudden we go from having a few cards, 2 or 3, to having 4 to 5 to 9 to 10. I mean, I've talked to couples who have it a his and her card, everyone you can think of, not you guys, but like 40 or 50 of them. No joke. I was like, did you ever think just to start cutting them up? Do what Daddy Dave says? And I'm just making the contrast of what it is when you start losing control to other people's family. The news tightens. You're like, I can't even breathe. And it's quiet and it's slowly and it's relentless. They don't let up. You just keep, the more you spend, the more you need, the more things happen. And you're not working for yourself or your family or your loved ones or your future anymore. You're working for Visa, MasterCard, banks, lenders, credit unions, all of them. That's what they want. And so let's talk about debt for a second, because all debt's not equal, right? There's two types of debt. Debt isn't evil. So while Daddy Dave's having you, cut up all the cards and keep your money in an envelope and bury it, I'm not saying that. There's good debt. And the simple rule that I talked about right at the beginning is you want to avoid debt that isn't making you money. Because our reality is we finance everything we buy, right? We're either paying interest or we're earning interest. It's one or the other. And so when you realize there's a difference, and when you take out good debt, and good debt's productive debt is the first type of debt. That's a debt that we want in our lives potentially. That is cash flowing real estate. That is a business loan that multiplies the income of your business. That's maybe education where you're learning a new specific skill set so you can go solve bigger problems for other people. But the consumptive debt, right? This is Parkinson's law. This is where, we talked about a couple of weeks ago, if you can't beat Parkinson's law, if you can't beat lifestyle creep, you might as well get a shovel, right? Linus, Jordan, you guys can get shovels for each other and go dig holes and jump in and have the other one cover you up the best of their ability. And I know not you guys, I'm just using because I looked over and saw your names, but we want to, if you can't beat lifestyle creep, you might as well just give up. Just play their game and just know that you're forever going to be at the mercy of others who can change what the rates are and what the payments are and all those things whenever they want, because it's their money. And so we don't want to live beyond our means. There's no reason to keep up with the Jones. I think it was Jim Carrey who said, hey, if you can't, pull back your lifestyle creep for a year to think about your long term, then you're always going to be in slavery. No, you're always going to be at the mercy of others if you can't just settle in and understand the difference between bad debt and good debt. Some debts, the debt that makes you money, that makes you a spread, that's good debt. Because now you're always ahead. You're in control. You have certainty. You might even have guarantees depending on how that's set up. And so that's not a financial burden. When we have the bad debt, when we have the consumer debt, it becomes a psychological prison. It becomes one that weighs us down. It becomes one that is ever present in all of our waking moments. There's no longer a present moment. We're worried about the future. We're worried about the past. We're worried about the decisions. We're judging ourselves. And it whispers. It's like that, when we race, when I do long distance races and tough events, you always have this little gremlin. And that little gremlin's always telling you the things that, you know, are the negatives. Like, oh, why did you do that? Jason, you didn't need that fourth bicycle. Probably didn't. But it starts adding weight to every decision because you start thinking that you're not good enough, that you're not worthy, and it reduces your options. It steals your sleep, it steals your energy, it puts you in a hormonal imbalance. And every debt payment is a decision about who your money is working for. When you start making payments to someone else, you understand that you're no longer working for your family, you're working for a lender. And every dollar that goes towards interest on that consumer debt is a dollar that you no longer control, that is no longer making you money, and is no longer protecting your family. And so, like I mentioned, the more that you borrow, the more your life becomes owned by someone else. And they make it easy to take loans. Go to your mailbox every day, 5, 6, 8, 10 things. And why do they make it so easy to make money? Are they making it so easy to borrow money because we're so handsome and we're so good looking and kind? Well, that's part of it, right? Because we are. What a great looking group we have here. But it's also just because they know that when we borrow their money, they're going to make money with their money because they understand this principle taught by one of the greatest thinkers of our time. Compound interest is what? It's the eighth wonder of the world. He or she who understands it earns it. He or she who doesn't pays it. So we've gone a really long way to tell you guys, like, that is the system we're playing. And it's also a system of short-term thinking where we're looking at things from a month to month status. If you start looking at what is the actual cost of making that decision today, and how's it going to affect me in a year, in 5 years, in 10 years, in 30 years, depending on what you're financing. Because now even our auto loans, they made them now 6 years, 7 years. That's nuts. So now you're like, you know what? I can keep paying the same amount that I was paying in 2010 on the last car I bought, but this car is nicer. This car has a moonroof. It's got all leather. It's got all the bells and whistles. And I'm going to pay the same amount. I'm just going to pay it for longer because I'm going to have a car payment anyhow. Is that familiar? Has anyone ever made that decision? And so, what would it look like if we controlled the system? And this is what we talk about, teach, what we're testing, training, teaching week by week by week is the power of a specially engineered, cash rich, whole life policy. One of the oldest financial institutions in this great country. And so, as always, if you're new here, smash the like button, subscribe, and ring the bell because it might just turn orange. And it's going to keep your progress moving forward by subscribing, by watching new content, by constantly training, getting on the mat and doing it. And then you have to teach others, share, invite, bring people to the bus. So when we talk about specially engineered whole life, we're talking about a system, and I'm only going to spend a moment here before we go into our actual example and show you what the power of actually applying and testing yourself looks like. But the power of whole life is simple. It's the reason banks have $225 billion of this stuff because it keeps your money liquid. It keeps it accessible. It keeps it growing in a guaranteed container that is guaranteed to get better and better every single day for the rest of your life. It transfers all the risk to your partner, to the mutually owned company. You have tax-free growth. in a protected environment, meaning protected from who? Attorneys. It's another wealth killer, right? We talk about it all the time. So now attorneys can no longer get your money, especially when you live in states like Florida. Now you have a guaranteed multiple death benefit that is tax-free estate for the ones you love or the things you love. So we have guaranteed tax-free growth in a stable, protected environment where you have access to the money and you make the decisions on how you use the money when you want to use the money. It's crazy. It is something that almost is too good to be true, but it's been around for hundreds of years. So we all know, all of us here know that this is true. So let's look at what happens when someone else discovers this, when someone else says, hey, you know what? I wonder if this is for me. And if you're wondering that, then you're on the right path. We had a doctor, this is not a photo of the doctor, but a good likeness of him, who watched a presentation about the infinite banking concept. And he saw how he could turn his debts into assets. And he was curious. And that's where it starts. It starts with a curiosity. And you go into the rabbit hole and you start doing your own homework. You do your own thinking. And he came up after an event. Imagine this. You're in an event, you've been at these events, and you're watching someone telling you that everything you think about money is not true. And the wealthy play a different game. And if you want to play the same game as the wealthy, you can. And you can learn how you can do what the banks are doing and multiplying the money. You can guarantee the growth. You can create generational legacy. And you're like, wow, I can have my money do all that. Wow, my money and I, we're going to get busy. We're going to have some fun. And so then you walk up and you're like, hey, I just watched that. That was cool. Can I do it? And you know what we told that poor guy? I don't know. I don't know. It depends. That's the first thing you hear out of most of our mouths. Anyone that's a wealth strategist or money mentor, it depends. It depends on you. It depends on what you're doing. Are you following the first law of wealth and paying yourself? And if you are, where are you storing your liquidity? Where are you storing that cash that you're paying yourself first? And we asked the doc this. He's like, well, I'm putting it in in a qualified plan. We're like, cool, that's awesome. So you're paying yourself. Very cool. How much are you paying yourself? And we come to find out he's paying himself about 25 grand a year. Some of you, that might be a little. Some of you might be a lot. Maybe you're saving 5 grand. Maybe you're saving 10 grand. Maybe you're saving 100 grand. Maybe you're saving less or more. But the point being, he's saving at least 10, if not up to 20% of what he's earning. And so he said, okay, doc, if you're healthy, you look healthy. We're looking at him, right? We're doing that field underwriting and okay, you're healthy, doc, and you're saving 25 grand a year. Would you be willing to switch one thing, to change just one thing? And he thought about it and he's like, well, let's look at let's look at what I have going on, if that's okay. Let's look at my debts. And I said, sure. And what we learned is that this doc, who is 45 years old, had his debts where, where when we laid them all out, we had him write them all down. This is the first thing I would tell all of you to do. And some of you have already done this with me. But his total debt was $478,774. He was paying $5,777 a month, or almost 70 grand a year. And we said, doc, if you stop storing your money in a qualified plan and you let us build one of these specially engineered banking systems, privatized banking systems, we'll help you pay off this debt faster. Do you want to do this together? And he's like, you know what? That sounds good. 19 years sounds like a long time. I'm 45 now. I can't even do the math, but I'm going to be a lot older then. I'm going to be 64 years old by the time I get done paying off the debt. And by then, my boat's going to be old. My BMW is going to be old. I probably don't want to live in that house anymore. And so we created a plan for this doc. And we created one of these specially engineered policies. He deposits the money. He moves the money. Remember, he's not working any harder or any longer. He deposits the money into this system. And he immediately has a cash value of $14,100 and change. Well, is that new money? Like, is that tax-free loan new money to him? No. Now that money has to go to work. It has to take back control of the debt. So what's he do? He pays off two of the balances completely, and the third one, he pays it down a little bit. And so now he's immediately recaptured $448. And if this is your first time seeing this, pop an eye in the chat and just look, like, would anybody want 500 extra dollars or 460 extra dollars a month? That's not bad. And now he starts, that money that was leaving his family going this way out is now coming back to the Doc's family. In the second year, and remember, we're trying to make something that's super boring kind of sexy. So in the second year, the Doc does the same thing. And look what happens. His cash value goes up a little bit. The tax-free loan he's taking increases. And he's paid himself back because he's being an honest banker. The first rule of banking, well, not the first, but one of the most important plans is, or points of banking is, you have to have a plan to pay yourself back. So he has this money, this $5,374 a year, $448 a month, flowing back to himself. Has he changed anything? Really? No. He just moved where the money he was saving in his opportunity fund was sitting, where it's going, where now he's storing it, and he pays off the next 2-3 debts and pays down the Beamer. Now he's recapturing almost $2,000 a month. I remember when we took our first loan out of our system and paid off 9 of these debts immediately, and we recaptured $2,200 a month. That was the catalyst. I mean, I was already convinced, but when we saw that work, I was like, this is it. Let's go. And so now this Doc, we get to year 3, he puts the same amount of money in because every year his business is getting better and better, but something really cool happens in year 3. Now he deposits 25 grand and he's hit the efficiency point. He has more than he's deposited. And now his amount goes up. He's paid himself back almost 24 grand. You add them together and he's paying off the boat. He's paying off the Beamer. And now someone who was always paying other people, other families, and was going to do so for 19 years, is quickly, within 3 years, 36 months, pivoted all of his debts back into his favor almost. He's only 3 years in and he's got 2 debts left. And remember, everything we're always teaching you when it comes to this process, it's never a get rich quick scheme. Money, money, money. It's a system, a process that gives us control. And so now he's put in $75,000 and he's taken loans out. Let's add them up for $55,000. So how much, pop it in the chat or down below, how much is left in his policy? 20 grand, right? No, Jason, it's all of it. All the cash value is still there and he's still earning guaranteed interest and most likely dividends on all of the cash value. Christian knows he got started now. And now look, he does the same thing in year 4, pays himself back, doesn't pay anything off. Remember, it's boring. Infinite banking's boring. And now if he's making these annually, the deposits, and making the loans annually, then that isn't all that exciting either. So year 5 comes, he puts the same money in, it grows a little bit more, the payment's back to himself. Total cash, that's enough to pay off the condo. Pays down the home a little bit, recaptures another $312 a month. Look how the seesaw has swung back in his favor. There used to be a giant gorilla that was on his back, right, with debt, $57.77 a month. And in this short period of time, in 60 months, which is usually someone's car payment, he has swung the pendulum back in his favor. He now has $5,556 that he is paying back to his system. Does it again in year 6, and something really cool happens in year 6. On a lot of my calls, I ask people, can you put, if you've never seen my mug, it's best dad ever material here. Sorry, other dads. I'm claiming the spot for this moment. But can you put 16 ounces of fluid in this 12-ounce container? No. And if you think you can, I'm sorry, I can't work with you. It's a disqualifier right there. I love creativity. That's a little too creative for my taste. So now he deposits money again, and we open a second account because he no longer could fit all of the money he wanted to put into this system. And so now it's time to expand his system. And so he deposits the 10 grand, He gets 13,000 in cash value, so he's got an extra 3,000 of tax-free money to use. He starts the second account, it performs just like the initial one. He's starting at scratch for the new one, and now he pays himself that amount back, and he's got 82,000 in cash. 6 years in, this doc has no debt. All because he changed one thing. All because he went from being a borrower to being a builder. He went from being a consumer to being a creator. And that's the shift. That's the shift that many of you have made. And the ones that haven't, what are you waiting for? It's time to expand your thinking, to change your thinking by changing that one thing. And so when we look, one of the cool things that we've done in the last couple of years as a group is we have people that are really good in the sheets, and they're amazing with building different spreadsheets, and they can mathematically show you as you go through underwriting that they'll show you the fastest path to paying off your debt. And in this doc's case, without using the policy we designed, a debt avalanche or a snowball would have paid off the debt in 107 months. And he would have saved a couple hundred, almost $200,000, $180,000. But then we took it a step further and we created an additional tool that lays what we've designed together, what your money mentors designed for you to solve your problem, to help you connect your long-term goal back to the present. And now you have a pathway, you have an off-ramp, and you know that it's going to take you X amount of time. For this doc, it was 6 years to pay off all the debt. It'll tell you how much interest you've saved and how long it'll take to pay yourself back, and what the guaranteed death benefit is for your family. Now you have $1 doing 3 jobs. You're saving it, you're spending it, and you're protecting your family simultaneously. And so now it's your turn to imagine your future. Imagine this: no more debt hanging over your head or around your neck. No more banks asking you or trying to get you. Now you can take their stuff and make paper airplanes out of it. There's no more bleeding interest of people that you'll never meet supporting their yachts, their lifestyle. You're going to keep more money in your family. How many of you would want to keep more money in your family to build a lifestyle that you don't have to escape from? And the solution's simple. It starts with that one decision to stop doing what's easy and start building what lasts, right? And so let's recap kind of what we've just unlocked together. What have we talked about here today? You now know the difference between productive and consumptive debt, and why the distinction is the first step in freedom. Remember, the productive debt is creating you money. Consumptive is taking money. What's creating or what's taking? You've seen how a whole life policy engineered the right way is not just insurance, but a system for control and guarantees. And you've met a real person, a doc, who traded 19 years of debt for a 6-year plan that put him back in charge and bringing a ton of money back into his family, creating a perpetual tailwind or opportunity fund, because he or she who has the gold makes the rules. And remember that feeling we talked about of working hard, feeling stuck? It's not a failure. It's a signal. It's an indication, a sign that it's time to stop asking the banks for permission. It's time to start reclaiming your power. And that doctor didn't get lucky. He got clear. He made one decision. He decided that what he was doing wasn't working. And he stopped doing what was easy and started building something that lasted. So now you see the real problem isn't the debt, it's the lack of control. We've walked through how rerouting your savings, your cash flow, your debts into a system that works for you, your opportunity fund. And when you implement this, when you build back your banking system, you keep more of what you earn. You buy back your time. Remember, we all want the same freedoms: time, money, relationship, and contribution. And it builds a life of ownership instead of obligation. So here's my question for everyone watching still. What's one area of your financial life you're ready to take back control of, starting today? Drop it in the chat. Have folks here hold you accountability. Say it out loud. Write it down, but make it real. Make it now. because when's a better time than now? Your system doesn't start someday, it starts today. It starts with one decision. Let's make it today. Let's build it together. Let's keep the money where it belongs, in your family. If you have not had a conversation with me and you feel like this is something that you need in your life, scan that QR code. I'll drop my link in the chat as well. Book a call with me, have the conversation, because you're either going to take action today or you're going to keep giving money away to everyone else's family. And that decision's yours. It's not mine to make. But if you want help, if you want to know how I went from having $3,300 a month leaving my family daily or monthly to bringing all of that back, plus now getting paid interest every month, earning money passively, I can show you the system that we used and I can make that real for you. So again, always blessed to have everyone here. Like Jordy said, it is one of the best decisions that you can make for you and your family, and we're doing it together. So again, if you're new, smash the like button, subscribe to the channel, click the bell to be alerted to new content, and start bringing folks to this webinar. Invite more people on the Infinite Banking bus. It's a big bus. And we have plenty of room. You can get on now. You can stay on for years and get off when you want. But this is your choice. This is your journey, your ride. Pick a direction. Pick what team you want to be on. Do you want to be a creator? Do you want to be a contributor? Do you want to play the game like the wealthy and become wealthy in the process? Or do you want to keep being stressed? I'm blessed to be here as always. I love you guys. Be blessed. Until next time, keep learning, and I'll see you all in this next video. Be blessed. Take care.